All right, it's the 13th of September 2024. Um, we're about 30 minutes before New York Open. Let's do the analysis. Let's get straight into the charts. Okay, right. Today, um, just a few things before we start. Price is at all-time highs, and there is little or no structure at all. So I'm not looking to take any trades today. So this session is going to be about just the process that I follow from the time I start my analysis, what I do and what I look for. So I'll just be sharing those steps and also some other value that I can um, on how I see the charts. Okay. So let's go straight into the weekly time frame, even though I don't use this for my trading. As you can see, price has broken above our last weekly resistance that we had, 2530. It's in uncharted territory right now. It's never been above 2550. In the history of gold, price has never been around 2550 or above that. So it reached 2550 yesterday. So there is, if you go down to the daily, there is absolutely no structure on the daily. There is no structure on the weekly. There is no structure. There is probably some sort of structure here in this area, but on the daily there is no structure. On the daily you can see some structure here, some demand zone here, but other than that, there is nothing, right? So the previous daily candle has closed above 2530. It's a strong bullish candle. We've closed above 2530 and we've closed above 2550. Let's just look at yesterday news before we proceed further. Let's look at news and see if just one second. I'll check if everything's working fine. Yeah, let's go see news. All right. Um, okay, just trying to look at news here. Okay, so I'm on forex factory. That's the news. I'm trying to look at some headlines that may have caused uh, the move. Okay, so that's possibly part of the reason. Just give me a second. Um, that's possibly part of the reason, right? Um, okay. Also, also possibly that, right? Because that causes uncertainty and that pushes the price of gold. Um, anything above 10, 12 hours, I'm trying to see what could have caused the massive move yesterday. Um, well, just that news there, and that news there possibly caused the move. But these news events come after the move started. Now, okay, let's just go back to the charts. One of the reasons why gold is pushing up like this is because to the left there is nothing. There is no structure. There is no obstruction. It's just clean space. And what I mean by clean space is there is no price action to the left. So price is in uncharted territory. Price is just running wild right now. Right? There's nothing to stop it. Um, we don't know where it's heading. We could head to 2600, right? We could head to 2600 easily. Several months back, about 4 months back, I think probably longer than that, I'd mentioned in the group in one of my voice notes that price could head to 2600 prior to the election, right? And that's very possible, even today. Even today, we're just 300 pips away. So it's very possible. We had a 500 pip candle yesterday, and price can easily do another 400 pips today easily, and we could reach 2,600. We could even get to 2,650 within the next couple of weeks, right? That's very possible if gold continues to run up like this. Um, so I personally am not looking to take any trades today until I see structure. Right now, a lot of traders they use the M30 time frame as their uh, analysis to take a trade off. I don't. I trade off. I take H4 structure. To me, when I say structure, it's the H4 time frame, right? I want to see structure on the H4 time frame. So let's just go straight into uh, our, our trading chart. Let's go to the daily. We have a new support here, 1197. So 1197. So that's basically 2512. So that's our structure. Let's go to the H4. Let's delete all this. Let's start from a clean chart. Let's delete all of this. Okay. Let's move everything to the right. Okay. So now just looking at the chart, price is above our weekly resistance. We don't have weekly resistance above this. We don't, because a weekly candle hasn't closed bearish yet. A weekly candle needs to close, that's the weekly time frame. A weekly candle needs to close down for weekly resistance to form, right? So which means it's not just today. Next week's candle has to close bearish if a resistance is to form. If it doesn't close bearish, if next week's candle doesn't close bearish, then we don't have weekly resistance, right? If the next week's candle closes bullish, then we still don't have weekly resistance yet, right? So we need to see a weekly bearish candle to form some sort of weekly resistance. Now let's go to the H4. On the H4, um, we have a zone right there. Okay, on the H4 we have a zone right there. Um, we have another zone right here, and yeah, that zone I would bring it all the way here, because that's just a little bit of that zone left there, or just to make things even more clearer. Okay, so, and up here um, we don't have a basing candle here. This is not a basing candle. That's not a basing candle. That could be a basing candle if that was a strong move up, but it's not. But it, okay, maybe that is leg in, base, leg out, because that candle has more wick than body. At least that's what it looks like. That has about 50 pips there, 45 and 19. Yeah, so that's got more wick than body. So let's go down to the H1. Yeah, there is a base there. Yeah, that's it. So that is a base. On the H4 there is some sort of structure there. Okay, so let's put let's put in the numbers here. uh, 331 681 331 681 oh 681. So yesterday, if you watch yesterday's stream, uh, you would have seen that I took a loss during the stream of about 3%. And then, like today, you can see net gains, right? I'll show you how I recovered that 3% loss. There was a trade. I'll show you exactly the entry, where the stop loss was, and where I took my trade, where I took my where I took my take profit. Sorry. 949, and that is 304. 949304. Sorry. And this one is score is 304. Two. And that low is 0097. Okay, that's not important. Okay, those are the demand zones that we have. Now, um, I don't trade, I don't mark H1 high liquidity zones. So for example, that's a zone there. There is H1 demand there. Um, right? And there is H1 supply there, but there's nothing to the left, right? There is nothing to the left for this to have taken out price. There's nothing to the left. So this is not a high liquidity zone. It is H4 demand, ugly H4 demand again, very ugly, because there is no strong move out. When I say ugly, what I mean is there is no there is no very strong move out. There isn't a strong leg out, right? This is a strong move out. This is a strong move out. This is a strong move down. It's a strong move down, right? This is the supply zone. You have a base. You have basing candles all the way there, and two H4 bearish candles. That is what I would love. That's what I'd love to see for H4 supply or demand. I want to see I would like to see two same color candles coming down or going up, right? So this is strong. And look what happened. Price, when it got to that zone, it did react and dropped 275 pips, right? So this one here is strong because we've got a strong move up and we are still continuing it up, right? So this is a high liquidity zone because for two reasons. Price hasn't come here yet, right? It's a fresh zone. It's fresh. Price hasn't visited here yet. And it took off this supply. It engulfed this supply on the left, right? So this is a high liquidity zone. I just want you guys to understand how I draw these and how I use them, right? Okay. Now we don't have supply. We don't have H4 supply because we have no structure to the left. So there's absolutely no H4 supply, right? There's none. This one, uh, this 2 Is that a high liquidity zone? Did it take out? Yeah, it did. It did. It took off this. It took out this H4 resistance. This zone here, this there was H4 resistance right there, and this base and this rally took that out, right? It took it out and broke above that high. So that too is a high liquidity zone. That's H4 demand. Now for the New York session, this is all we have. Unfortunately, this is all we have. And price is 450 pips away from this zone. Currently, as price stands right now, this is where I would want to take a trade, right? As price stands. But um, in the next 2 hours and 13 minutes, an H4 candle is going to close. When that closes, we have no idea how it's going to close, where it's going to close. Depending on where that closes, we might have either a supply zone, or we might have a high liquidity demand zone, or close somewhere there, or a high liquidity supply zone. We don't know. We got 2 hours 13 minutes from now for that to happen. I'm not going to be here for that because price is at all-time high. I'm in no rush to take a trade. I'm in no rush to get in on a trade today. Today is Friday. It's the end of the week. Let price do what it needs to do. Let it go as far as it needs to. Make proper structure, and then I will look to take trades, hopefully next week. Okay, but I'm in no hurry at all to rush into any trades. Okay, um, I need to see structure like this. This is structure, which is what we did over the last couple of live streams, right? That's structure. Price, that's a supply zone. It's taken out demand here, come down, that's structure. So I wait here to take a trade, and I did get my trades there. Okay, that's what I want to see. Now, let's um, let's go back. Let's go to how I recovered my loss yesterday. Now, I wasn't planning to take um, any more trades because I had a 3% loss. But here's the reason I did take a trade. Now, the way I trade is, as I've explained, the way I trade is I look to take trades from high liquidity zones. Or, in other words, I look for pools of liquidity, right, in the session that I trade. So if I'm trading 3 hours in the New York session, I'm looking for one or maximum two pools of liquidity, possible pools of liquidity, because I don't know for certain if they hold liquidity or not. But I'm looking for possible areas of liquidity, 1 to 2, right? So for example, yesterday I had marked out, I think, this area as a part as liquidity, and just one above. So price came there, I took a trade, I lost that one, and then I waited at the one above, and I lost that one too, right? Because price just decided to run up. Now, what's the next area of liquidity? 25550 is a place where price has never in the history of gold has ever been there, right? It's a psychological number. Um, there are going to be what's possibly what could happen here is um, there are orders placed in either to close or to take profit on certain orders, right, or to sell, for sell orders to come in, because that's a psychological number. Price has never been there before. This is the first time gold is coming there. So I was expecting to see some sort of reaction there. So it's as if 2550 to me was a high liquidity zone or a high liquidity area where price can react at. That was the idea, right, that I had. So when I lost this trade, I had a supply zone here. I had a supply zone here. So if you watch yesterday's stream, you'll see the loss that I took here. I had a supply zone marked somewhere here. I lost that one. And then I had one marked here, right here, at this resistance, right? And price came there on the M15. I tried to take a trade and it just went straight and hit my stop loss. I hardly had any time to close. I think a 1 minute candle just spiked up and hit my stop loss, right? And that's how I lost 3%. Now, the next area of interest for me was another high liquidity zone or another level or a price level where possible liquidity lies. Those are the only areas I look to take trades. So if you are trading the signals of the indicator, that's one other way that you can trade the signals of the indicator, that you wait for signals at these high liquidity zones. You wait at those areas only. You don't trade every buy or sell signal that you see of the indicator, right? That's one way to do it, okay? Or you follow the trade plan that I've shared, okay? So let's go to the 15-minute chart and see what happened at 2550 yesterday, okay? Right. So price came here for the first time. So this candle didn't touch it. This candle did. This candle touched it. Soon as it touched it, I waited for the candle to close. And as you guys know, this is how I draw my fib. And I have shared these uh, levels with you, how to draw it. It's very simple. 0, 0.25, 0.5, 1, and 2. Those are the levels, right? So it just has the fib as 1, 2, 3, 4, 5 levels. That's it's just got 5 lines to it, right? So your 0 will be the end of your fib. Your 0.25 is your sniper entry, and your zero point 0.5 is your 1 RR. If it gets there, that's 1 RR on your trade. And then level 1 is where you start drawing the fib, and it is also the 3 RR level of your trade. If it hits that, then you've got 3 RR, and if it gets to 2, that's 7 RR on your trade. Okay, so the high of this was 169 and 42. So let's put those 142, 169. Okay, that's where we were. Okay, so this is what I did. So this candle opened at 1700. That was the open of the H4 candle as well, right? Um, let's go down to the 1 minute time frame. Okay. This right here was the open of the H4 candle. So this 15-minute candle had closed. This was the open. I placed a pending order right here. My stop loss was about 19 pips. To me, that's my ideal stop loss. Anything between 15 to 20 pips, 20, 15, 15, 20, 23, 24, even up to 25, to me is my ideal stop loss. Anything above 30, 35, I really don't like taking, okay? Because as I said yesterday, price has too much of legwork to do to get me 1 RR. So if I take a 30 pip stop loss or 35 pip stop loss, for me to get 1 RR, price has to move 30, 35, 40 pips to get 1 RR, right? So this to me is great because if just 19 pip stop loss, as soon as price pulls back, I'm at 1 RR already, right? So I took my pending order here. My stop loss was just 4 pips above that, and it came straight down to 3 RR, right? I got out just under this. Under this, when price started coming close to this area here, this was a M5, M1 supply zone, perfect M1 supply zone, aligning with these highs here. So that was the level. Soon as price touched those highs, came aligned with this, I got out right here. So I got a little over about 3.5 RR on that trade. That one trade recovered my 3% loss, right? That one trade. That one trade recovered my 3% loss. Okay, so that's that's the way I trade. To me, high RR will help you recover losses quicker as long as you don't overtrade and over risk, right? If you overtrade and over risk, no matter what you do, you're not going to be able to recover your losses and you're going to blow your account. That's guaranteed. If you overtrade and over risk, you will blow your account. Um, but high RR, so even though I had two losses, I took this trade. This trade aligned with everything that I had planned for. It was within my trading hours. It was within my 3 hours that I trade. It came to it came to 2550 for the first time, right? I was expecting price to pull back at that level even a bit, and it did pull back about 80 pips. It pulled back, right? And I had about a 19-20 pip stop loss, and I took about 3.5 RR on that trade, right? So that one trade recovered the loss, and I was done, right? Obviously, on a bullish market like this, when prices, you know, you know, skyrocketing, I'm not going to hold a trade expecting price to come down to this 7 RR position. There's no way, right? I want to get out. My whole goal is to get out either somewhere in the middle of either between 1 RR and 2 and 3 RR, somewhere 2 RR, or maximum at 3 RR. There is a reason. I've said this many times before. There is a reason why the fib is drawn the way it is, right? There is a reason for this 3 RR level, right? Because those over the years I've seen that these areas, this level, this 3 RR, this 1 RR, where the fib ends, where the entry is this level, price bounces at these levels. So you can expect price to come and bounce, and that's exactly what it did. You got an entry there, perfect, right, to the pip, came, bounced at the 3 RR, then continued up, right? So in a strong trend going up, this is all I'm looking to take, you know, 2 RR, 2.5 RR, maximum 3 RR. That's all I'm looking to take on a move like this, because I don't want to take a trade against the trend, right, and expect it to come down. That's not going to happen. There's a lot of bullish momentum. The only reason I took this trade, as I said, was because of this psychological number, because price has never been there before, never. Okay, so that's how I recovered yesterday's loss. Now, coming back to today, there is nothing. There is nothing for, at least for me, to take a trade. Right? We've moved since yesterday. Where are we? Wow. Yeah. Okay. So price has moved 620 pips since yesterday. Yesterday we moved 500 pips, right? And we've moved 162. Um, price may have volume to go another 400 pips up from here, or 300 pips, 400 pips up from here. But just because it has volume, that doesn't mean I have to take a trade, because according to my trade plan, I don't have a high liquidity zone anywhere near price right now. The closest high liquidity zone that I have is here right now. Right now. Now this is New York Open. At New York Open, I've got a high liquidity zone here. In the next 2 hours, as I said, there might be another high liquidity zone, either somewhere here, somewhere up here. If price comes down, there might be a high liquidity zone here. I don't know. I'm not going to be trading 2 hours from now. Okay, because I want, let price do what it needs to do. Let it go up if it needs to, let it pull back if it needs to, let it do all of that, let it settle down, and next week I will look to trade my trade plan again, right? That's the plan. So a couple of other okay, just one more thing that I want to stress on again, right? Again and again, and I will continue to stress on this point over and over again. For those who of you are trading whatever system that you're trading, if you're trading any sort of indicator, if you're trading moving averages, if you're trading supply demand, if you're trading support resistance, whatever that you're trading, if you're trading just fibs, just Fibonacci levels, whatever, try to identify where possible liquidity is. If you are a day trader, if you are a session trader, if you're trading either the London session, or if you're trading the Asian session or the New York session, whatever session that you are trading, right? If you are a session trader, if you're trading just 2-3 hours for the day, and that's your trading day, try to identify where possible liquidity is, right? That's the game. That's the game. That's it. You will not get it right all the time. That's not the point. It's not the point. It's not about getting it right all the time, right? You might identify a zone where there is no liquidity, right? That's not the point. It's not about being right all the time. It's about those areas are going to give you the low risk, high probability, high RR trades. That's the reason, right? Trading is a numbers game. If your system does not uh, give you high RR, at least 1.5 RR or 2 RR, does not give you that, you are going to lose in the long run. You cannot trade a system that has negative RR. You will fail. The numbers don't add up. You will fail. In the long run, you will fail. It might take you 6 months, it might take you a year, it might take you a year and a half. You will fail. The system will fail, and you will blow your account. It's not possible. It's got to be. So you can have a system, you can trade a system that has one error, one to one. You have, let's say, for example, a 20 pip stop loss and a 20 pip take profit. That's fine. That's absolutely fine. That's great, in fact, right? Now all you got to do is manage risk. So so for example, let's take a sample size of 20 trades, right? So let's say over over the month you take 20 trades, right? Let's just say over the month you take 20 trades, and all of those trades have a 20 pip stop loss and a 20 pip take profit. Okay, if you manage risk, so for example, if you're trading, let's say the 15-minute or the 30-minute, if you're managing risk on the 15-minute time frame, right? let's say you took a let's say you took an entry here, right? Let's say you took an entry somewhere here. let's say you let's say you took an entry right there when this candle broke out of this low. Okay, let's say you took a candle right there. Let's say this stop loss is 20 pips, right? And you're expecting price to go down to go down 20 pips, and that's your drawdown area. So let's say from your entry to the candle high there is 20 pips, and you're expecting for price to go down 20 pips, and that's your trade. Price comes down, begins to reverse. Close partial positions here, 50%, close 50%. Price goes further up, you see a bullish candle close, a big bull candle, M15 bull candle close. There is no reason to hold this trade at all for any reason, because once you see a strong bullish candle like this, your stop loss is going to get hit, guaranteed. Your trade, so close the entire trade. So you've closed 50% here, 50, 60, 70%, whatever. You close that here, and you close the full position. So your stop loss never gets hit. You've closed a lot of your trade. So now, instead of losing 20 pips, you lost about 10 pips, 12 pips, right? So the next time when you get, let's say you lost 10 pips, and the next time you'd have a winning trade and you got 20 pips, now that trade is not a 1 RR trade, the trade that won. The trade that won is a 2 RR trade. Why? Because in the previous trade, the trade that lost, you managed risk. So now your trades, even though your system is a 1 RR system, you are now you're taking your trades a 2 RR, all of your trades. That's why it's so important to manage risk. Soon as you get into drawdown, manage risk. That's the name of the game. Manage risk. Soon as you get into drawdown, soon as if you are a session trader, right? And if you are trading whatever session that you choose to trade, and if you are a session trader, which means you'll be trading about maximum about 3 to 4 hours, for the day, because you're looking to make use um, of the volume that comes in at a session open, right? Either the Frankfurt Open or the London Open or the New York or the pre-New York session or the New York Open or the New York the NYSE session or the London close, any one of those sessions, right? You're looking to capitalize on the volume that comes in at those session hours. Okay, so manage risk. And if you are a session trader, the best way to do this is to look at the M15 time frame. That's it, M15. You don't need to manage risk on the 1 minute time frame, the M5, the M30. You don't need to do any of that. Just go down. Once you take your trade, once you get your entry, once you have your stop loss set, once you have your take profit set, once you're in the trade, switch back, switch down or switch up, whatever, to the M15 time frame. And soon as, if you have taken a sell trade, if you've taken a sell trade, very simple, if you've taken a sell trade, if price comes into your drawdown area, so this is what I mean by drawdown area in this example that I shared. This is your drawdown area. Okay, let me just change the color of that. I really want to drive this point home for you guys. um, okay, okay, this is where you've taken your entry, right here. This red area, because that's where your stop loss is, that area is your drawdown area. Soon as price starts breaking, when it gets into the drawdown area price, so which means now your profit is in negative. And soon as price comes back in, soon as the price is below this in a sell trade, your gains are positive. Soon as price reverses and goes back into this red area, that's the drawdown area. Now your gains are negative. You have a negative gain. So soon as an M15 high starts to break, soon as price moves and starts breaking previous M15 highs, M15 high here, M15 high here, soon as starts breaking M15 highs, close partial positions. So as a rule, as a rule at the beginning, what I used to follow is, and I still do, soon as the first M15 high or low is broken. So if I'm in a sell trade and the first M15 high is broken, 50 or 60% of my position closes immediately. Immediately. I don't think twice. I don't, hope and pray the price will reverse. It's like clockwork. Closes. 50-60% closes, right? And that's something that you can do with this trade manager. You can do it manually, right? Or you can do it to the trade manager. This has a thing called aggressive risk control setting. If you go and look it up on MQL5, there's a link to this below the video. So if you find this trade manager, it's called Smart Keys. The trade manager will do that for you. You can set up for it to close 50, 60, 75, 80, whatever percentage that you want it to close, it'll close it soon as price starts to break previous M15 highs. Very simple, right? You do that, and even if you have a 1 RR trading system that gives you just 1 RR on every trade, you will start to see very good gains on that system, because that system will no longer be a 1 RR. It'll be 2 RR or 2.5 RR system. Okay. Um, One other thing that I wanted to mention was, for those of you who aren't profitable yet and who are trying to trade on your phone, don't do it. Delete that app, delete that C Trader, delete that MT5, delete that MT4 app from your mobile phone. Do not trade on your phone, because you can't do analysis on your phone. You can open trades, you can close trades, that's about it. You can't do proper analysis on your phone, and that's important. And you've seen how I do analysis. 20-25 minutes of pre-work before you start to trade is very, before your session starts, is very important. 20-25 minutes, pre-work. So you got to come in to your chart, at least 20 minutes before the session opens, and you have to do your prep work. This is your prep work. This is the prep work that I do, right? I look at that chart on the daily time frame, right? Then I come here, I go to the H4 time frame as you've seen, and I do everything that I need to do here. I draw my zones, and then I mark my high liquidity zone areas, and I wait at those areas for a trade. I wait for price to come to me. If it doesn't come to me, fine. I do the same thing the next day. If price does come to my zone, and I place my entry and I don't get entry, it happened this week, that's fine too. I'll come back the next day, do the exact same thing. I'll come back the next day, do the exact same thing. That's it, right? Because to me, these high liquidity zones, as I've said several times, are the areas that will give me high RR trades, low risk, high probability, high RR trades, right? Those are the only areas that I want to take trades from. Um, yeah, so uh, okay, so I had a question, that someone asked about what's the standard RR on my trades. Um, as I shared, the fib, uh, 3 RR, if it gets to, on average, because there are partial positions that close, I would say about 3, 3.5, 4 RR if it gets to the 7 RR mark. So for example, if I take a sell trade and if the trade, if I get entry here and it drops to this, that's 1 RR. If it comes here, that's 3 RR. But because I take partial positions, 25% off at 20 pips, 25% off at 50 pips, I end up with about 3 RR, 3.5 RR. If the trade comes all the way down here, I would get about 4.5 RR, right? Otherwise, I would end up with about anything between 2.5 to about 4.5 RR. Anything between that. That's my trade. To me, that's what I get. Anything between 2.5 to 4.5, sometimes even 5 RR. That's what I get on trade. So if I have one or two losses, and my win rate is about 55, 60, about 60% at best, about 60% at best, right? So with a 60% win rate, even with a 50% win rate, right? Let's say 50%, for argument's sake. Let's just say my win rate is 50%. With a 50% win rate, um, if I take if I take a minimum of 2.5 or 3 RR trades, or just 2 RR trades, I'm going to be up every month, right? That's what I want. I don't want to trade any other system. I've tried a lot of other systems. I don't like I don't like taking breakouts. I don't like chasing price. I want price to come to me. So for example, in this case, uh, next week, if price does come down here, right? I'll look for an opportunity here to take a trade, and that too, I want to see. I will draw my fib on the M15, and I want to see the pullback to the sniper entry, because that will give me the tightest stop loss, 15 pips, 16 pips, about 20 pips stop loss. That's the trade that I want to take. I took a couple of those trades this week here on the live streams, which you guys saw. That's the kind of trade that I want to take. Okay, so that's about it. I'm going to end this session because I'm not going to be trading today. Let's see what price does, probably by the beginning of next week. I won't be trading any live sessions on Monday and Tuesday. I'll be back on the charts on Wednesday. So let's see what price does until then. I'm sure we'll have quite a bit of structure by the end of Tuesday, right? Because on Wednesday, I think we are having interest rates on Wednesday. Um, yeah, next Wednesday we're having interest rates. So Wednesday, New York session price might not move much, but Thursday, Friday, They're going to have, we can expect, we can anticipate um, fairly good moves, fairly good volume on Thursday and Friday next week, which is where I would like to trade. I would want to trade those 2 days on next Thursday, next Friday, right? All right, guys, that's about it. Yeah. All right. So I'll be here next week, next Wednesday again with charts and analysis. See ya.